Hello, it's Friday the 19th of April and we are 11 hours and 40 minutes from Bitcoin halving. So if you're in the United States or the Americas, North or South America, then your halving will be today. And if you are in Europe or forward there, then it will be Saturday. So that should be quite exciting because we know what's happened following previous halvings, and the price action that we have seen in crypto, especially Bitcoin overnight, with that nasty shakeout with the news in Iran, Israel, is really bullish. It's pretty exciting. Now, normally when we look at previous Bitcoin halvings, and if we go back, we can see that following the halving, we saw some pretty nasty sideways trading. So whilst it's easy to get excited and say, oh great, we're going up again. In fact, let's go, this is a weekly chart, let's go back to this very first halving in 2016. We had a pretty nice bounce into it, but we actually made a new low following this halving, and we kind of didn't really bottom and make new highs until 5-6 months later. So we could possibly see the same again. Let's go to the 2021. We can see that the halving happened in May, and we really kind of didn't bottom and make our way up again until July. So that was a shorter period. So each time it's been a little bit of a shorter period. Now, what I learned certainly with QE and stuff, is that markets tend to anticipate. So once they learn what something means, they kind of anticipate it. And so we could be seeing the same here with Bitcoin, in that we won't see, a month or two of sideways bottoming or nasty pullback. We could, because the markets anticipate what happens, just rally from here. We have made a very nice textbook three-wave correction. We held the $60,000 level that we were looking at. Let's go back to my marked on chart. Now this $60,000 level came from the 236 fib pullback from the November 2022 lows, and that's the level that we have bounced from perfectly. And it was also, if we go down to the daily, a textbook equal measured move. It's also this previous swing low from March. So there's really lots to like about this, but we may, because our moving averages are the wrong way around, and at the moment we have bounced, $5,000 off the low. This is not an ideal place to buy it. One thing I found about moving averages, especially the 50 moving average, which works like a backstop, and I'm looking at a 4-hour chart here. The 50 moving average on a 4-hour chart is the 200 moving average on an hourly. So if we look at this is the 200 moving average on any time frame you look at, is really king of the chart for trend. And the first time back to it, you tend to see a little bit of a knockback. So although we made a very nice hourly double bottom and we've made a really nice rally, this, where we are right now, is where we are likely to see a little bit of a pullback before we continue higher. And usually when I look at it like this, I get the fib levels to help me. So for example, let's look at the swing that we did here in March from the lows, because we did very similar look. We got above, we had a really nice bounce, we made a higher low, we got back to this 200 moving average on the hourly, and then we had a really deep pullback. If we put this from the highs, we can see that actually this was a kind of messy 50% retrace, and then we did a really nice three-wave deep retrace before we continued higher again. That's very common after the first swing, 50% or so. So if we go from this lowest low here, again, when I'm not sure, I just go level to level to level. So we may get a signal here at 64,000, 63,255. But if we do a deep 50% retrace, 62,500 area. I use Heiken-Ashi, as you know, I really like them. They're as a really nice visual indicator for when we're turning up again. It's a moving average color-based system. And so, yeah, I'm watching this pullback here. Ideally, because I sort of can see this is 5 waves, I'd really like to see kind of a 3-wave pullback in US trading. And if we make a higher low, I think it's a really nice signal for more upside. Now, if what happened last night with Israel and Iran isn't it, and it gets worse, or Iran snaps back. We have noticed now that Bitcoin is really sensitive to these world events along with other markets. So I would be a bit cautious about buying Bitcoin or any of these markets with a load of leverage at the moment. I do think that, yes, there's a good chance that this is a really nice bottom and we're headed back to the top of the range, but it's not for sure. And we could, at this point, if we returned lower here, we really, in terms of moving averages on most time frames, are still in a down trend. We've got a bearish cross of our daily moving average. So I think waiting for that higher low and turning up again would be the better course of valor. But in terms of what we're seeing, you know, if we look at this on the weekly and see how we are holding above, let's put regular candles on. We're holding above the previous highs. We could get a really nice bullish weekly close here. 3-wave correction, holding above these previous highs, holding above the 236 fib. It's all pretty nice looking, I have to say, for Bitcoin. And we've got pretty similar patterns going on in ETH. So this is ETH, and my Fibonacci retrace levels, let's go out to the weekly, come again, same as Bitcoin, all the way from the low that we made in June 2022. And let's get rid of that. I'm going to look at this as a retrace level. We're bouncing from the weekly 20 moving average. Unlike Bitcoin, we retraced to the 38.2 fib at 28.64, and we retraced all the way back to the weekly 20 moving average, which Bitcoin is not near. And we have made a textbook 3-wave correction if we look at this on a daily, and a very nice 3 waves in this BLEX. So all set to bounce from here. Because we've got this extra fib level that we dropped down though, in ETH, it gives us a really kind of cool resistance level when we back test this 236 fib, which is at 33,333. If we can close above and hold above that, I think that we are on our way up higher. And this looks just like Bitcoin, a nice 3-wave correction. Above here, we can say this trend line resistance, and above this trend line resistance, we retest the highs. So we go level to level to level. 3,300, then I would say 3,500 would be a breakout, and then we would retest those 4,000 highs. Would not be surprised if this unrolls as 3 waves. Again, if we fail at 3,300 here, or if we take our time getting there and turn lower, the bottom is not in yet in ETH. And this lovely 3-wave correction pattern is clear in so many other really interesting altcoins. I would just say, because until we get some kind of surety about this really is and everything's calmed down, please be careful with buying these with leverage. If we look at this in Solana, we've got very similar pattern going on here, bouncing from the weekly 20 moving average, holding above these previous highs. It's the 132, sorry, it's the 38.2 fib at 132 that we're bouncing from. If we get stuck underneath 132, we're likely to continue to 108, which is another 25%. No, it's not going to be very nice. And the resistance is at 161. If we look at this on the daily, again, it looks like a very nice 3-wave pattern, although this is quite an extended 3rd wave. So key resistance on a bounce here, if we hold 132, is 161. I have to say that I think at the moment ETH looks better than Solana. Let's take a look at a few more that have made really kind of nice corrective patterns. Just going to find... Where was I going? My apologies. SEI then. Let's take a look at this one, which has been a pretty stellar outperformer. Now, when on this chart, I've drawn the fib retrace levels in SEI all the way from the lows in October 2023. And when I look at the levels, I want to see, are they working and is the market looking at them? At this 236 fib, was initially support, then it was resistance. Textbooks bounce from this 38.2 support, then resistance. We dropped straight through these lows and this 50% level in the middle that I was expecting to hold. And here we are bouncing from 0.5 and this really nice 618 fib level. When you bounce at a 618 fib, your resistance is the 50% pivot level in the middle. And if you get above it, 38.2 is your second target. And that makes sense with these daily moving averages as well. This is where the 20 moving average is. And this would be, when by the time we get there, likely where the 50 moving average is. So 0.62 and then 0.746 would be the two upside targets. And very often, it's called the golden ratio zone, and very often the bulls and bears fight it out. So it would be bearish if we stayed underneath this 50% back test retrace level. It would be bullish if we got up to 38.2 and this 50% level became support, and we could start talking about a bottom being in. But certainly each one of these fib levels, every time we've bounced from it we have gone back and tested the previous one. And so for SEI, that means for me 0.623 is a pretty sure thing, and it's the daily 20 moving average as well. And above that, we can start talking about potentially some more upside. Let's take a look at INJ. If we look at this on the weekly, from the high to low, this again, just like SEI, is at a 61.8 retrace, but this one has gotten above this 50% level in the middle. Let's look at it on the daily. Now, are we going to have a really nice daily close above it? Today hasn't closed, and this is a little bit of resistance as well with this daily 200 moving average. But if we do push higher, then we know that the 38.2 is next, and that would be at 33.45. I think first time back to this 200 moving average, we may see this become a little bit of resistance, and I would like to see personally to buy this a little bit of a better bottoming pattern. I'm a little bit concerned that this is looking like a little bit like a three-wave, corrective move. But above this 200 moving average, if we can manage it, or if we just make a very nice three-wave correction here, then I think this potentially looks good for higher. So if this, for example, 50% move level held on a back test, I think we do look pretty good for higher, and 33.45 next in INJ. Prime is another one that we have just looked at. Let's see if we can find our way around, find Prime. Here we go. Now, if I look at the weekly on this, take everything off. This is a very nice, looking like a very nice three-wave correction, holding these previous lows. Haven't quite got back to the weekly 20 moving average yet, but if I go down to the daily, this does look like a very nice three-wave correction. If I put my scribbles back on, for a lot of reasons, I like this. For the first, if we take this most recent swing from the low in January, so this year's low to highs, this is a 50% retrace. It's a pretty good support and resistance level. And if I take those fibs away and we look at the bigger fibs of the whole swing, it's also the 38.2 fib here, which initially, like, it looks messy at this 236 fib. But if we look at it closely, you can see the first time back, we had a really nice 50% bounce off it, and then it became resistance. So I think if we take out these lows, or if we go more than 236 fib from this low to high, we're going to go back to the middle here at 22, and potentially breaking out from this descending channel, that would be the sign for the next leg higher. So Prime at the moment is looking pretty interesting. Let's take this fib away. And we are here, let's take all my scribbles off. We are here right at this 236 fib level then on the daily at 19.679. So a close above 19.679 would say for me that we are on our way higher, because this was a 50% retrace. I would look for 22.66 next, and then potentially a breakout from this channel above the 61.8 at 23.99 or 24. So we know we are going up again if we can hold above 19.679. Here on the hourly, we have tried it twice overnight, so we can see that this now becomes an important resistance level. That's what I'm watching for in prime. Looks pretty good if we can keep going above it from here. Let's take a look at Ape. Now, Ape has made a double bottom. We have retested the October 2023 lows. What I kind of find interesting about this is we've done it with a very nice equal measured move level at 116. I wouldn't like us to see us find resistance and get underneath 1.16, but from here, when I do this, you know, when you measure the moves, so when you measure from this high to low, project it from here, this is the equal measured move. When you get above that 61.8 level on a back test, which in Ape is at 1.538, and there's also where the daily 200 moving average is, then above there we know we're pretty much going higher. And we would look, when you have a textbook ABC like that and you exceed this, I look for at least a 786 retrace, which would mean my first target would be all the way up here again at 2.32. That's just the most likely retrace. So potentially, should you be buying this double bottom? I think it looks pretty good, but I always like to buy pullbacks. So on the 4 hourly, for me, this isn't quite enough. I like the double bottom big picture, but this isn't quite enough of a bottoming pattern. It looks like 3 waves, and so a lower time frame double bottom here would be a better look, or at least just a pullback. So I usually put my Hakanashi on. I would like to see a higher low, a pullback and then a higher low. Something like that. It's a really good level, but just not quite the kind of shouting at me buy signal that I want to see yet. Let's take a look at a couple more. So link. Now, from the lows in June 2023, we made a very nice, you know, definition of a trend normally is like 5 waves up and then corrections are 3 waves back. So from this low, we made a very nice 5 waves, and we have made a textbook 3 wave back to this previous swing low. So there is loads to like about this level the link has pulled back to. The problem here is this weekly 200 moving average. We really need to get above that if we're going up again. But in terms of how this looks, this is really kind of a textbook place to build support and find support. I'm not sure it's quite ready, but I do like this bottoming pattern and how we are holding the lows. So as you know, when I think we've got a very nice 3-wave correction like we have here in Link, I put my fibs on from high to low. If we can close above this 236 fib level, which is at 1453, and where we got rejected at the first attempt last Monday, then I think we have got more upside, and potentially we can start talking about a bigger bounce and whether the bottom is in or not. So 14.54 would be the first target, and that's what we've got to close above. For me, I'd like to see it above it and buy pullbacks, and then 16.13 and 17.42 next in Link. Now, how are the meme coins doing? Let's take a look at Doge. Big picture look, very nice pullback to the weekly 20 moving average, pullback to these previous swing lows. This may be quite an interesting level for Doge to attempt to bounce. Now, it's counter trend because we are underneath this 20 and 50 moving average, but it's kind of got quite an interesting look. If we measure from this high to this low, look how on a daily close in Doge we are holding this equal measured move level at 0.1478. There's really quite a lot to like about this. So the same rule applies here. If you bounce from this equal measured move level above the 61.8 level on a back test, would say you're going up again, and that's exactly where we are back testing the daily 50 and 20 moving average. 0.17. So I would not be surprised after this rally to see another leg higher. And above 0.17, I think we are headed, we could talk about this as a kind of flag or a channel. We're headed to the top of it and a breakout from the top of it. We're going to retest the highs in that 0.217 level where we got rejected before. So a lot of these alts, you know, even let's see, Floki was another one that I was watching, and I have lost my chart, but let's take a look at Floki on the weekly. No 20 moving average in here in this one because it's kind of new. So very similar, you know, looking for a back test of these daily moving averages, what looks like a very nice three-wave correction back to these previous swing lows. A lot of these charts are looking really quite interesting. Let's see. I again, you can always buy a pullback. Don't rush in and be the hero that buys the first low. Let's make sure it really is a low, but if we can get through this weekend, I think next week will give us some really good opportunities.